Hello, this is Compound Interest Stock Guy, and if you're new to the channel, please subscribe, give me a thumbs up, hit the notification bell to be notified when my videos come up, when I finally upload them. Again, I'm going to talk about stocks that have a low price to book today, below 1, and yeah, that means that their book value is worth more than their market cap. So that is what I'm going to focus on today. I hope you like this video. Again, I'm not a financial advisor. This is just for information and entertainment, and to help you on your research purposes. Do not buy a stock because I talk about it on this channel. Buy it because you did your due diligence and you did your research and you like the stock. Yeah. So here we're going to get into Nemaska Lithium. All right. So Nemaska Lithium is 62 cents per share. Oh, and they had quite a lot of volume the other day. I think this just got 847 million shares out. So there's a lot of shares out right now. The price to book is 0.886, right? So that means that their market cap should be worth about 15% more. So yeah, that's a good thing to know if you're looking to invest into a company. I think there's other things that you need to think about, but I do like looking at price to book. I think you can't do terribly wrong if you do your research and you realize that the company's solid and has this awesome price to book under 1. You're gonna do pretty good, in my opinion. I've seen it happen a lot. I've seen it with my Harvest One shares. I bought those stock when the warrants when they were under say about like 0.6 price to book, and now they're over 1 price to book. But I mean, my warrants have gone up in price. I've also sold some warrants as well, but I'm not going to get into that, and rebought them as well. But yeah, so Nemaska, it hit 50, what is that? Looks about 56 cents, somewhere around there, and it's trading around 60 cents. So I think if you can get around there, if you're interested in the stock and you believe in lithium and you think the company has a good future, you think that Tesla is going to be huge, you think the lithium boom is just coming, I think this is a great company to invest in. I've been looking at it more recently, ever since it started going down a lot in price. So this isn't the news I want to look at. I want to look at the Wabuchi mine site. So they're going to resume construction. So construction activities were put on hold this morning following by a fire but they resume on February 5th. So I guess that fire happened on January 31st. Yeah. So it's located an alternate cafeteria facility, which is approximately 1 kilometer from the existing lodge, that will be open to accommodate Nemaska Lithium employees until mid-March, when the Wabuchi mine site, currently under construction, will be opened. We are very grateful for our local partners who will be lending us a cafeteria of their nearby facility. So they're good on with their partners around there. It was a very popular for the local, and we are sensitive to the loss, which we hope this won't be for short term. But they're going to be existing lodging facility will be opened on mid-March to accommodate the new lithium. The Nemaska Lithium employees. So that's when it's going to be open, but they're going to be staying in that cafeteria for now. So yeah, they're kind of in a ghetto spot, to be honest. But yeah, I think the company, if you think that lithium is a good bet, I haven't looked at their balance sheet, so they might be in a tough cash position. I'd have to say that their market cap's 525, but I don't know. I think it's a company to consider just for the fact that their price to book's under 1. It's not my favorite company that we're going to talk about today, and I don't own any shares, but I do think it's a company that you should put on your radar and maybe look into buying it potentially. So the next company is going to be Elkanah. Okay, so Elkanah has been on a roller coaster ride. So let's look at their 3-year chart, right? This is a company that's been in alcohol and now they're transferring over to marijuana. They still have alcohol shops in Alberta, and I think they just closed down the ones in BC or something like that. But what I like about the company is their price to book is 0.564. All right, so that's pretty much like it should be twice as much. The price should be like their market cap should be twice as high, right? It's just some panic sellers. They were like, I don't like this company, especially because they got rid of their dividend, right? Got rid of their dividend, and then people were like sappy about it. They're like, F this. Excuse me. So yeah, that's something to think about. 75 million market cap, pretty much. 37 million shares out. So yeah, it's just slowly coming back up. I looked at the RSI on Stockhouse earlier. I didn't want to go into my trading account with TD, but I went to Stockhouse, and when it went down to here, it went like 20 RSI. So now it's like slowly gaining some it's gained some momentum. The VWAP's 4.713. I don't know if you guys understand what VWAP is, but it's the very weak average price, right? So something to think about. That means like that when buyers just start selling and people start buying, like usually around that level. And there's other indicators that kind of like help with the VWAP, but some people just like they'll trade off based off the VWAP. I mean, I'm not advanced in understanding the VWAP to do that. I follow 50, 200 day moving averages, the RSI, candlesticks, stuff like that. Kind of momentum if I see that volume's picking up. But someone make tons of money just playing off the VWAP. Or yeah. So I mean, I could see it closing up on 6, maybe 8. I mean, it's hard to say, but it looks like the trend's going up, right? If you look at the S&P 500, ever since it started tripping down, it followed it like all the other stocks too, right? If you understand that stuff. But basically that it seems as though it's picking up. People are just like, they're like, oh shit, this is as a low price to book. I better get on it before it goes back up, and it's like equal towards its like one price to book. And Aurora has investments, like they own some shares in this company, like, and they bought around like $10 to $15. I think that's when their warrants are at $15. So you gotta understand that eventually it should go back up. The company has a price to sales of like 0.25. It doesn't say it on here, but it does on Click. It's not doing it. F it. But I'm pretty sure that's what I saw earlier. Their price to sales is around 0.25. So you're going to be hard pressed to find a company that has a price to sales like that. Because I did that. I did it before. Is basically like Chronos, their market cap's around $5 billion and they did 3.8 million. So let's bump it up to 4 million. So say 16 million on average per year. That's what they're baked in. Like that's what they're doing right now on their run rate. I mean, I'm sure they're doing better. Like this upcoming quarter, I'm sure they're gonna do like 9 million or whatever the case. But I mean, let's do a bear case for Chronos Group. And so Chronos Group, they're 5,000 million, which is 5 billion, and then they're doing 16 million. So they're over a 300 price to sales, and Alcana has a 0.25 price to sales, and so that's like almost 1,200 times more expensive on a price to sales book. So I don't know, something to think about for sure. It's not everything in gold as far as like, and when you're buying these stocks, you gotta look at it in a short-term time frame or a long-term time frame if you're deciding to buy or sell, because that's just the way things go. Like you a company could be under price to book for a long time, or it can be over price to book. Like, see, you look at this price to book, it's 22. That's crazy, right? And then you got companies such as Alcana and Namaste that are under 1. So that means that these companies are worth like 20 to 50 times. Like Kronos is worth 20 to 50 times more than their price to book than these other companies. And so it's just something to think about. I mean, sure, this momentum on Kronos is doing really good, but you just never know when it's going to start coming down. I mean, I think it still has a bit of legs to go, just because there just seems like there's a lot of people on the NASDAQ and just people who are just betting on Kronos ever since they got all this cash flow, that they're like, yeah, we better keep buying up Kronos Group. And, they're doing good, right? But this company, Kronos, they could fall. They can hit, say, like $35 maybe this week, and then come down like a few days later, come down all the way to like 20, and then go down to, say, like $15 or something, right? And I mean, this price to book, it's not really, it's probably old, like, so it's not really up to date, because if you look at the fact that Kronos, if their market cap's 4.8 billion, and say they have like $2 billion in cash, well, then you can't really say their price to book's like 22, because that cash flow should be like looked into their price to book. But as far as their other assets, besides their cash, like that's pretty much what their biggest asset is right now, is their cash flow, because they got the most cash besides Canopy in the whole marijuana space. So I don't know. I don't want to go on too much on a tangent on Kronos, because it's not some company that I'm buying. I might be looking to do short-term puts on Kronos if the opportunity looks attractive. If I could see it, like getting in for, I don't know, like $1 per, like $100 for $100 for 100 contracts for the option. Say for like $100, and I buy them at, say, like for like a $30 strike price on the put. If, say, it hit like $35, and then all of a sudden, say, goes down to like 25 or like 24, you could see those puts go up like 8 times or something like that. They could be worth like $8 instead of what I paid for $1 for it. So something to think about. I'm just learning the options. I haven't been very successful in the options straight up, but I'm a do or dyer. Like, I basically am determined I'm gonna win. And it's not about the first inning. It's about the third and the fourth and the fifth inning when you're learning something, right? I'm just in my first inning, right? I might be taking some hits, and I'm not doing well, and I'm losing money, but overall it's cumulative, and over time, my expertise and my practice and my patience will get me to being extremely successful, just learning from my mistakes, right? So I don't know. I'm not gonna say I'm the best at, and I'm not. It's just straight up. But I ain't gonna give up, and I'm looking for options to buy calls and to buy puts on if they look attractive, right? So enough about that. But Kronos Group is very expensive, in my opinion. So let's get into Sprott Resources, right? So this company has a 0.268. Now, that's a very low price to book, right? They got 34 million shares out, which is a very low float, right? So now, if it's 0.268 and you got companies that have like 22, I mean, you got to think that this company could go up like 2, 3, 4 times easily just with momentum. It's not well known. it's got 35 million market cap. So if it went up to $4, it would only be 140 million, right? So that's based on copper price going up. They have this one mine that I'll get into that later, but basically if they're doing 220 to $2, that's what their price per pound it costs them to get copper out of the ground. That's what they're doing their evaluation on. And so if copper goes up to say like $3 to $5 US like soon, then it's all that extra money per pound is going to be helping their mine, in profits. Like they have a cash flow. I'll get into that later, but it's really good. Like, and the more the price of the pound of copper keep going up, I mean, I'm gonna go to investing.com because that's one of my favorite sites. Straight up, is one of my favorite sites because you can find so much information. It's just phenomenal. And you can also you can see what other people think, right? So come Sunday, this is Sunday, right? And all these commodities start buying and selling come Sunday night. I mean, nobody was buying and selling in the weekend really, but now come in the last like 24 hours, then they start buying and selling. So it's 2.76, right? So now let's look at a 5-year plan. Okay, 5-year, but actually let's do it longer because I want to look for the bullish thesis, right? I mean, the bearish thesis is that they go down there, and then it's not worthwhile to be running that copper mine, which is something that a lot of these mining companies are doing. They're not really gonna be doing that stuff until the price rebounds. The nickel mines, uranium mines especially. Uranium with Cameco, they just like shut down their MacArthur mine because they're like not making any money until it goes up higher. Then we might come back on. Like, but they're saying they're not even gonna come back on until like 50, or they're not gonna do it even at 50 maybe, because they think that if they were to start doing it, because they're such a big producer, that it's just gonna flood the market. So they want to wait till it gets to like $70 or something like that. And then they'd be hella profitable. But you look at this, like, so it goes to say like 3.18, and then it goes up to 4, something crazy, right? And it could totally happen because with inflation, right, it can easily get up to like $5, $6 per pound. And see, like, look at the, I like this thing because it just tells you what people think, right? It says, okay, we're bullish, no, and then there's people that say it's bearish. And I mean, it doesn't matter really in the short term what people think, because the people that are like voting, they don't have the big pockets, right? People can manipulate copper prices for like a long time, they got billions of dollars, but eventually the verdict will come out, right? The verdict will come out eventually, and then they'll be like, oh shit, I should have got into copper because copper was undervalued at like 2.5, right? So you look at it's like gold, right? Gold's been having a bullish outlook for a long time, and now it's like starting to start going up. Well, it's not doing very good right now, but today. But that doesn't really mean much. I mean, maybe it does actually. I shouldn't really say that it doesn't mean anything actually. I might try to get out of my Yamina resources, I think that's what it is, wire I call, but it's hard to say. I mean, this might just be a fake, right? A fake out for bulls, right? Because that just looks like a little bit of consolidation. As long as it doesn't break the 1300, then that doesn't matter. But I don't want to keep going on about gold, but I'm just saying though, yeah, that's a bear. Is basically it was down here for the longest time, right? Like, people were like, no, it's like it's gonna keep going down, right? And then but you see these people, they'll vote, right? And they'll be like, no, it's gonna be bullish, and eventually they're right, because if you bought it at $1,200, like you bought a gold company, you would have done good in the short term, because eventually it starts going up to 13. Now if it breaks above these levels, that'll be very good. And I'm not really showing that you just because it's gold, because gold and copper, they can work together. You know, you got company, and when you're mining copper, you can also find lots of gold in it as well. So yeah, it's something to think about. I hope gold really starts ripping, starts going up to 1,400 bucks. That'd be very attractive. Just see that, you know, start going up. And that's the thing, is like for the last, it's been really weird in the whole commodity sector, because you see companies such as Apple and Microsoft go up to like almost $1 trillion, or Amazon, and then but see all these commodities, they're in the last, ever since 2013, they haven't moved up at all. So they're trailing like all the inflation on all these companies. So it's like, what the F? Because why aren't these commodities worth a good value? They need the commodities to produce stuff. So, you know, these mines, they have to work together and like shut them down or stop, like produce less, and then eventually the price will go up, and then all these companies, they'll all win, right? Because then the price is going to go up, and they're going to be making they're going to be mining it at a level where they can be profitable, which is good for the business. So I don't know, something to think about. Okay, so let's get to Sprott Resources. This, I've been buying a lot of warrants in this. Is a SRHIWTI, and I'll show you later why I like these warrants. But you see, is double bottoming around here, and now if copper starts going up, and even if it doesn't, there can still be a bull case for this company really ripping in the short term. Now my warrants are good till February 2022. So I got 3 years, right? And I bought them hella cheap. Yeah, hella cheap. I bought them for half a penny. And if this company goes above 666 in 3 years, I'll make hand over fist money. Like this goes to like say $10, I'll make tons and tons of money off only like small investment, less than $1,000. But that's what dreams are made of, you know. When you find your research and you find that this is price to book 0.268, and you realize that this company could blow the F up, then I think that's a, you know, it's a risk reward. I understand that. But this is what I want to get into. They're gonna get financing. They're working on financing. Okay, so Eric Sprott is, I think, sort of behind this company, but not like very big. But Rick Rule is, and he goes on. He's on YouTube. He's at like these PDAC events for mining all the time. He's been very bullish on things like uranium and gold and other things that just have, like, because that's what I was talking about, how the fact that these commodities, they've been beaten down so badly, but you know, all these other companies have just gone ludicrous. So I think it's time that commodities start being worth fair value. So yeah, you got their $34 million in cash flow. That's their projection for 2020. And that's US dollars. That's 50 million Canada, pretty much. Maybe not that much, but it's like 45. And then US 45 million in 2022. And that's only based on a $275 dollar per pound, right? So that's a very reasonable, it's very conservative, you know, because say if it goes to $5 or goes to $4 or even $3.50, these are going to be marked out of the water, because they're basing it on where did it say 220? Let's see. Where did I read that? I read it somewhere. I already talked about it, but it's like 220 per pound. Now, if it goes to like 350, they're gonna make $1.30 or so per pound. So that's gonna help their projections like crazy. And so yeah, they also believe that it's in Chile. Their perspective and business climate is they say it's the best jurisdiction in the world to build a copper business. So it's like inexpensive, and they say it's very friendly. So that's awesome, because some of these countries, it can look good, and then all of a sudden things go sideways and they go downwards, and it's not good. That's why mining is so ridiculously risky. But you're gonna find these marijuana companies. A lot of them are gonna fail in the next few years too, and then you're gonna be like, oh, I guess mining's not so risky if you compare it to it. But because everybody, okay, here it is. It's a cash cost per pound, 220 to 250, right? And they got a capital expenditure of 25 to 30 million for the next year. That's their 2000 outlook, right? And their tons is like 8750. So millions of pounds, 18.2. So yeah, it's could be pretty decent, you know, cash cost per pound. So that's what I like, and just the fact that we're currently evaluating long-term that will allow us to execute the 2019 guidance. Okay, so if they were to get, say, like 30 million with, say, like 5% interest, right, to move them along, if price of copper goes up, I think that's a pretty smart move, to be honest. So yeah, we'll see. Now this is the company. Their business and investment portfolio is a private copper producer that owns 100% of the operating Minera Tres Valles copper mining complex in Salamanca in region 9 in Chile, I think. The mining two main deposits, Paparono and Don Gabriel, open pit, and an underground one. So 5,400 tons per day, and it was operated by Vale. So Vale's a humongous company, and they've already invested 240 million, right? 240 million US. That's crazy, right? That's like 300 million plus of Canadian funds, and you can buy this stock for $35 million. I think it's a bargain if you ask me. Crushing capacity. So they own 70% of it, and it's owned by a private company, the other 30%. And there's a technical report you can look at. This is Sprott Investment Strategies and Sprott Resource Holdings Investment Portfolio. You can Google Sprott Resources, right? And you'll get there. So anyways, Corsicolt is a publicly listed CSO, premium quality metallurgical coal in the production of steel. And so they own ownership of this company, 17.1%. So it's pretty much like 3 million that they own in value, really in the fair value. But that's not up to date. This is September 30th. I'm not sure what it is right now, but it could be more, it could be less. And then they own about like less than $1 million of this, and it's a $9 million in-play oil IPO. And then they own 50% of a vertically integrated branded food business focused on natural and organic and value-added branded products. And then private joint venture in that is a defined resource of 27.48 billion tons and can produce 50 million tons with the concentrate grade of 68% iron. So they say is the largest iron ore deposit in Canada. It's interesting. So it's 5 million US they counted it, and they own 40%, right? So that is the business. Do you want to? I'll show you guys what the Canadian warrants. That's too short, too small letters. Now, warrants are risky. I'm not going to say they're not, because they are. But there's also bigger rewards to be had. So I just don't give a F. Damn, just that commercial thing, he just doesn't want to go away. Damn it. Whatever. So let's see. It's Sprott Resources. Okay, so this is the ticker for their warrants. And the strike price is 666, and it's good till February 9th, 2022, right? So that's 3 years from now. Yeah, that's right. Go away. So Sprott Resources. This is a Canadian. So, and if it hits 1166 for 30 days with the VWAP, then it'll be that's like an acceleration clause. So that's when they would have to be calling in all the warrants. So then you can sell it then, and those would be worth like, I don't know, $4.50 to $5 per warrant. And I just bought them for hella cheap compared to that. So yeah, they say they're very overvalued, but I disagree, because I looked at their price to book and it's hella cheap. And whenever they did this thing, I don't really care what they do. You know, that's the thing is, they say January 25th, right? I don't know who people who are doing their research on this stuff, but I don't care what they think. You can't rely on what other people think if you're going to be a strong investor, in my holy opinion. Because if you follow Jim Cramer, he's gonna tell you a stock as soon as it's gone up, right? You got to figure these things out before they come out, right? You don't want to be behind the 8 ball. You want to be ahead of the 8 ball. So that's what I'm going to do. 1166. If they were to reach that, I would be a very wealthy person based on buying these warrants. Now, I got a lot of more irons in the fire on my investment portfolio. I own a lot of Harvest One warrants. I own a lot of New Strike Brands warrants. And I intend to do pretty good on them. I think those companies are going to do good. Like for example, for the New Strike Resources, I own these warrants, right? Now, these are going to expire in the 20th of February, so they need to reach above $1.75, right? So if they were to go to like $3 and I bought them for 5 cents, I would make about $1.25 per warrant. There's an expiration of 260, right? So basically it'd probably be hitting around $3, and those warrants would be called in, and I would make like 20 times my money on those if that happens. But you know, if they're selling for like 5.5 cents or whatever tomorrow, you know, eventually maybe they go to 25 cents. I'd like to just sell them and then turn them into these warrants, because these have a lot more time on them. They have till the 2023, so that's a long time, and there's no acceleration clause, so that's what I want to do. They're going to be more expensive, no doubt about it. They say Canadian warrants say they're a bargain. I mean, I disagree with them on the Sprott Resources ones, but I'm gonna say I agree with them on saying that is a bargain in a sense, because there's no acceleration clause. Like, it could go to like $6 in the next 4 years, right? So if it goes to $6 and you buy them for say like 20 cents and it goes up, you have that much time on them, right? You have so much more time than the regular warrants. So the same thing with the Harvest One. I own these warrants, which are going to expire in January 20th, January 31st in 2020, and they're doing pretty good. But at the same time, if say they go to like 10 to like 20 cents, I'm going to think about selling them and buying these warrants, because it's 109 and I got almost like another year. And I don't think there's any acceleration clause on the Harvest One warrants. Doesn't look like it. They say that these ones are undervalued, which I agree. I think they're worth a lot more, because if they hit 230 like for 4 cents, I don't know. Anyways, I hope you liked this video. I went through the companies with the lowest price to book, and I'm talking about companies that I own shares in and I potentially might own. Again, I'm not a financial advisor, and you got to do your own research. Don't buy stock because I bought it. But again, I hope you subscribe for future content and entertainment, and give me a thumbs up. Give me a comment. Tell me other companies that you believe that you found have a really low price to book as well. I'd love to hear that. You know, you're not going to find a company. It's going to be very hard to find a company with a lower price to book than Sprott Resource Holdings, straight up. If you do, let me know. I'd love to hear. Again, until next time, hit the bell for notifications so you know when I upload a video. You can be the first to know. And until then, peace.